Okay, and welcome back, students who are taking financial accounting. And we're doing quote unquote the introduction, process, workflow, and chapter 1 for Business Accounting U. And as I said in the previous video, I was going to pick up exactly where I left off. So let me get there. All right, so there we go. All right, so I had said that the heart of the set of books for a business is called the general ledger. Okay, and in the general ledger, we try to think, I try to think of the set of books of accounting as somewhat sort of like a textbook. Okay, and I'll use the American history textbook again, as American history as an idea for a textbook. Okay, when you open up the first page of the textbook, you have a table of contents, right? And in the table of contents, it says chapter 1, let's say American Revolution, and Revolution. And you have a subheading, let's say Boston Tea Party, Washington crossing the Delaware, right? And you have all of these subheadings, right? Delaware, right? You have these subheadings. And of course, there's a page reference, right? Page, 33, 54, 75, whatever, okay? Now, in the books of accounting, and I know I'm jumping ahead here, but you have what are called assets, liabilities, equity, revenues, and expenses. Revenues and expenses. Now, these are categories of accounts, okay? Because why? In your general ledger, you have many different general ledger accounts, and they're grouped into categories. Well, each category can be, if you think about the history textbook, assets, you can consider that as like chapter 1, liabilities is chapter 2, equity is chapter 3, revenues is chapter 4, and expenses is chapter 5. And if you think about it in that respect, the general ledger accounts actually get numbered, okay? And all assets begin with the number 1. All liabilities begin with the number 2. All equity accounts begin with 3, revenues begin with 4, and expenses begin with 5. So if you're looking at a set of books and you're looking at an asset account, and let's say you have account 110, which is your accounts receivable, okay? Or cash would be, 100 would be your cash account, okay? All your asset accounts begin with this number 1. Your liability accounts would begin with the number 2, so you can have account, say, 2000, which would be accounts payable, right? Now, even though I was using only 3 digits here, as a different example, I'm using 4 digits. Something like the American Red Cross actually has 7 digits, a dash, and then has 5 more digits, okay? But it follows the same guidelines as here. All of their asset accounts begin with number 1, liabilities begin with a 2, equities begin with a 3, revenues a 4, and expenses a 5. Okay, so if you think about the general ledger and you say, okay, I have these general ledger accounts and they fall into these 5 categories, and each category begins with, is like a chapter in the textbook, right? Well, in your table of contents, yeah, you have chapter 1 and you have these subheadings. Well, the books of accounting has the same type of thing. Instead of a table of contents, it's called a chart of accounts. And the chart of accounts starts out with its assets. And, account, let's say 100 is cash, 110 is accounts receivable, and then so on and so forth. And then it goes to liabilities. And say account 200 is accounts payable, okay? And you go down through more, and then you have your equity accounts, which start with a number 3, and you have those accounts, and then you have your revenues, and they start out with 4, and then expense accounts starting out with 5. Okay, so as you can see, it's very similar to the table of contents in American history, where chapter 1, it's about the American Revolution. Chapter 2 is the War of 1812, and it has subheadings. Chapter 3, let me erase this here. Chapter 3 is, the Civil War, right? And it has its subheadings. Well, as you can see, it's very similar in structure, the table of contents, to, the chart of accounts. Okay, and when you think about it, how does an author create the, a textbook, right? Well, he goes and he creates an outline, right, which looks like the skeleton for the table of contents. And then he says, well, in the American Revolution, I have the, Boston Tea Party and Washington crossing the Delaware and Paul Revere's ride and whatever. Okay. And he goes and he says, okay, well, I'm going to put them in this particular order, which is like our ledger accounts. And, I'm going to, on page 54 is where the Boston Tea Party is going to be, and I'm going to write a paragraph there. So he goes over to that page for the Boston Tea Party, and he writes his paragraph or two about the Boston Tea Party in the actual textbook. Well, it's the same exact thing here. You have this here table of contents, okay, this chart of accounts, and our chapter is an asset. And then we have these sub account. Well, these are actually ledger accounts, but they're like subheadings. And if I want to look at, accounts receivable, I go to account number 110, just like I would go to the Boston Tea Party on page 54. And if I have to add information about my accounts receivable, I would enter it in account number 110, just like the information that I have for the Boston Tea Party. I would write the paragraph or two on page 54. Okay, so that's that's sort of like an idea as to how the chart of accounts work, and it's nothing more than a table of contents for your general ledger. But remember, your general ledger is broken up into different categories, assets, liabilities, equity, revenue, and expense. And underneath those categories, you have your ledger accounts that pertain to that particular category, right? So that's why in this diagram, your chart of accounts is pointing towards the general ledger, because all of the general ledger accounts that you have on your chart of accounts has a separate section in your general ledger. Now, if you have these different accounts, let's say account number 100 is for cash, 110 is for accounts receivable, 210 is for accounts payable, okay? Well, we're going to add information to all of these general ledger accounts in the general ledger. And when we add the information, we're going to end up with balances in those accounts, all right? As an example, let's say I add $1,000 to my cash account and then I pay a bill for $200. Well, my balance is going to be $800. That's going to be the balance in that cash account. So all of these ledger accounts are going to have balances in them. And what we do is we create a trial balance, okay? And what a trial balance is it's nothing more than a listing of all of these here general ledger accounts and the balances in those accounts. Okay, so if I have a chart of accounts and I don't have any balances, it's not a trial balance. But if I have this chart of accounts and I'm showing the balances of all of the ledger accounts, like let's say, for example, cash now has a balance of 800, accounts receivable has a balance of 100, accounts payable has a balance of, say, 300. Okay, now what I'm doing is I'm forming a trial balance. All right. And we'll get into the specifics of what that looks like and other things, but this is just a general idea, okay, that I'm creating a trial balance. Now, I can have more than one trial balance, and the names of the trial balance determines at what point in time I'm creating that particular trial balance. For example, you can see here that I'm showing a beginning trial balance, an ending trial balance, a pre-adjusted trial balance, an adjusted trial balance, and a post-closing trial balance. Okay, these are the most common trial balances. I mean, there are accounts receivable trial balances. There is a accounts payable trial balance, and numerous other trial balances, but the whole point behind a trial balance is that the trial balance shows the information and the balances as of a specific date. Okay, and the name of the trial balance is based upon whatever use that you're using for it. Like if I'm having a beginning trial balance, meaning, oh well, this is my starting trial balance for my general ledger. And if I go through an entire accounting period, which we'll get into in the next few slides, when I get to the end of an accounting period, I can create an ending trial balance, right? Which is different from the beginning, because the beginning trial balance shows the accounts at the beginning, the balances in the accounts at the beginning. But when I get to the ending trial balance, well, obviously that's going to be a later date, and it's going to be showing my ending balances. Things like the pre-adjusted, the adjusted, and the post-closing have to do with closing out an accounting period, but I'm not going to get into that right now. I just want you to realize that when we're looking at information, okay, we have a chart of accounts, which is nothing more than a listing, a table of contents of the accounts in the general ledger. And the accounts in the general ledger have balances, so we can take that information, those accounts, plus those balances, and create ourselves a trial balance, so that we've kind of like summarized all of the information that's in our general ledger. Okay, and depending upon at what point in time that you're doing it, it has a different name. And you can also use the concept of trial balances for other things like accounts receivable, accounts payable, and there's a few others which I won't get into right now. Okay, so with that said, by no means am I finished with this here overview and process. But I want to point out right now, because I'm going to stop the video here and go on to another one, all right, because I'm at 13 minutes. But I'm going to make the point here that, pause the video whenever you need to, rewatch it again. If you don't understand something, watch it a few times. I mean, that's the beauty of having a video. You can pause, rewind, and watch it again. And if you still don't understand something, feel free to contact an instructor, either by telephone or by clicking on the Contact Us link on your My Courses page, okay, and sending an email to an instructor. And we'll be more than happy to help you understand the information, okay? Because again, it's about understanding an application. If you memorize it, you're going to be, you're shooting yourself in the foot, all right? But if you don't understand it, well, here's, you can look and see the videos that Matt Fisher maybe produced. Definitely, look in the textbook, and here's a different presentation of it. But again, it's just a matter of, pausing and rewinding the video and watching it. And if you still have questions, contact an instructor. Okay, so with that said, I'm going to stop here and pick up in the next video.